Hi, welcome to this video day, which is on Sunday, March the 11th. We're going to be looking at three Forex pairs. They all include the yen, USD JPY, Euro JPY, and AUD JPY. Now, in terms of our videos recently, since the start of the year, been heavily bullish of the yen. It's moved over 500 pips against the other currencies we're looking at today. Personally, I think the yen has got more upside. Okay, any pullback in the yen is a buying opportunity, and we're seeing a pullback right now. So I'm just going to go through some potential levels of entry, stop, and target. Now, in terms of just for new viewers, we are going to be using fairly simple chart analysis today, just focusing on big levels that matter to key institutions. To find those levels, we're using our favorite tool in Forex trading, the COT Net Traders Positions. If you don't know what it is, look up COT Net Traders Positions on this channel and you'll find some introductory videos. If you just watch the video through right now, just keep in mind what we always want to do is trade with smart money commercial hedgers when their positions diverge away from speculators. Now, just going to go and do my chart analysis, but do keep in mind this is my view as of right now, can change in line with the market conditions. If you want, access to our daily technical analysis of 12 major pairs for life, and also get all our trading techniques and COT analysis, you can click on the link beneath this video. Right, let's start with USD JPY first, and we'll do the COT Net Traders.
Chart of Japanese yen against the USD. It's COT Net Traders data, so it's always foreign currency. First, we will reverse this chart around the USD JPY when we draw our levels. But in terms of what we're looking at here, really, is just to see what the commercials, the hedgers, are doing against large speculative funds. Now, just for new viewers, we're very long-term yen bullish, and it's this that alerted us to a buying opportunity. You can see the commercials step up their buying, specs go short against them, and off she goes. Now, at the time when we saw this, we noted it was slightly bigger in terms of a long position than here. You get 500 pips. We expected 500. This one does 700. Okay. Now, while we're very long-term bullish of the yen, I think we are going to get a decent correction. And you can see, I've noted C here, this line here, important in my view, because look at B. Okay, when the commercial dropped their longs down to the line, you get a correction. Over here on A, you get a correction. So we're almost touching the line. So I'd expect corrective action. It's just really a question of how far that corrective action might run and how to play the trade. So what we'll do now is we'll just look at the chart of USD JPY and draw our levels. USD JPY, we've got things the right way around. I've noted this level up here. It's about 113.40. We've done a few videos on this, but just for new viewers, obviously we know the commercials are buying yen and selling dollars. Speculators are going against them. We saw that on the COT chart a minute ago. We want to sell, so we'll sell through the 20-day moving average. 20-day moving average is a great tool for trend followers. Yeah, in a downtrend, if it breaks, you're looking for it to provide resistance. If it's uptrend, you're looking for it to provide support. Come through the 20, poke back, test it, big red away from the 20. That for us indicates we're going south, which we do. Get a bit oversold here. Then you expect prices to go back to the mean or average price. It's not a brick wall, but it very often very, very effective. See, one touch, two touch, you need to get a third touch there, and then we're off to the downside. These two candles can't take it out. These two can't. This one's right at the 20. So it's a great level to trail your stop behind. Obviously it can go through the 20. It's not like I said, a brick wall, and yeah, you've got to be a little bit back from the 20 if you're running a stop in a big trend. Okay, but it gives you an indication of how far you're going to get a correction too. Now, in terms of this candle here, it's a warning there's going to be a correction. Okay, red candle, but the tail goes through here. This one here, this blue hammer. and she finishes above it, then this tail here can't take out that tail. That's probably no more sellers in the short term, and we finish blue. If you're running big trends, always best to run 2 positions in our view. You want to stay with the big trend, but you want to lighten exposure just in case of a rebound. So we'll take 50% out, and then she comes up, okay, to the 20. A lot of people say, well, take the whole 100% out. Well, yeah, big trends can just run on. So always like to stay in until the trend is negated. Now, in terms of this pair, we're still very bearish, but we could take out this 20. I'll just go through how you get in on the trend if we do. If we don't, and it does provide resistance, I'd sell through 106 and put the stop back clear of 107, okay? Now, I think there is a strong possibility that we could take out the 20. So how far could we run? I think that level. It's 107.80. It's these 2 bodies here. These 2 bodies that cross here with the red coming down. Blue, red, rejection down. Okay? Yeah, I think that level will be on the cards. So how would you play it? Well, if she comes up towards the level, I would look to sell. The 20-day moving average will snake up, so you could sell back through that or through the round number. Could run on. I think this level, though, would be hard to take out on a close basis, which is about 108.60. You can see, yeah, tail, body, body, couple of tails, another tail, tail, and these 2 candles here. That zone there, I think, would be hard to take out. And what you just want to do is look to sell weakness. Don't presume it's going to go down. So you're looking for weakness in this level. If we hurdled 108, I would certainly sell back through 108, stop back behind 109. It's been a really good trend. You know, the corrections so far have not been too significant. We're probably due one, but I just don't think there's going to be a trend change. Okay, so yeah, coming on weakness if that 28 isn't taken out. If it is, they're the levels that I think are significant. Okay, so we'll see how this one goes. Now let's move on to a Euro. JPY. Euro JPY daily chart. I'll just draw my levels of entry, stop and so forth in a moment. First of all, COT net traders positions. There are none actually released by the CFTC for the crosses, but you just create them yourself if you wish by just taking the 2 majors that make up the cross, USD JPY, Euro USD, working out what the groups have got. We just do it as a simple ratio. So speculators, 5.1 to 1 in terms of shorts over longs, so pretty bullish, and that's despite a decent move to the downside. Commercials oppose them, 3.5 to 1 in terms of shorts over longs. They remain bearish. Divergence between the groups, 8.6. That's quite a high divergence historically. Points to further weakness in the euro. Now, just for new viewers, I've just drawn this line across here. When we get divergence above 10, they nearly always interest us in terms of going with the commercials. You normally get a break in their favour. So into this level here, we're looking to sell. Again, for new viewers, if you use the COT, get used to getting stopped out pretty frequently because the commercials are indicating here overvaluation, okay? It's just an indication. We're trying to catch the turn, okay? So to just give you an example, I thought that was a great sell through that 20-day moving average. Comes down, comes back through the 20, then off she goes to the upside and we get stopped down. Now, when you use COT, yeah, well, for us, it doesn't really bother us because the loss is relatively small and we're going to get another bite of the cherry. We're after the big trend, okay? This candle here for us looked unconvincing. Gets above 137, not really following through. We just think, actually, you know what? We'll sell back through the 2 bodies. If she runs on, we can always reset entry again. But she does what we thought. Comes through the 2 bodies, triggers a short. Even better, gets through the 136 level. This time she takes out the 20. And we're looking for it to sell on and rallies to fade back to the 20. Like I said, it's not a brick wall, but you can see you get poke above the 20 here, poke above the 20 here. It doesn't really clear it decisively. Down she comes. That red candle moves away from the 20. The downtrend gets in motion, get down to 130. Now we've got bounce back to the 20. So from our perspective, in 136.50, out at 131.50, 500 pips. Now we've actually come back in. So, yeah, if you stopped out, don't worry about it. You know, you will get big moves using the COT. Now, we're testing, or we tested the 20 on this one here, this candle, this one, and this one. And, yeah, we've got a round number behind it as well. I personally think it should hold. Okay. Now, I think it's going to hold, but if you're coming in fresh and it bounces, what would you do? Well, let's say she does bounce above 132. Just sell back through the 20-day moving average. Below 132, stop, I think, be behind 133. These two bodies here, these candles there, yeah? However, my own view is I don't think she's going to bounce. You've got two tails there. Second tail lower than the first one. And the body, yeah, it settles off the highs. You want to come in on weakness just through this double bottom here. Then see if she runs. I'll put this 124 level on the chart as the target. That's where I think we should go to. Okay. Now, I've done this level here because this was simply when the ECB started talking about stimulus reduction. And that supported the euro all the way up to 137. The argument now, in terms of stimulus reduction, has gone, in my view, as a bullish fundamental. Why? The market expects it to be too quick. They expect the ECB to be out of bond buying by September, raise rates by December. The ECB are already saying that, you know, they're being very cautious. Inflation isn't rising. They've got no chance of being out by September, in our view. At their last meeting, I put it here, removal of increase. They did actually remove that from the statement. Removal of, basically, they could increase stimulus if necessary. A lot of people are saying that's bullish of the euro. It's not, because who expected them to increase stimulus? Everyone's looking for them to reduce it. It's just cosmetic. So it's not bullish. For us, this big fundamental should push the euro lower. Stimulus reduction, slower than the market expects. You still got a lot of specs long, so plenty to get flushed out on stop, in our view. Also behind the charts in terms of two fundamentals, I think will weigh on the euro. Japanese liquidation of Eurozone bond holdings. It's already happening. Japan is a huge holder of European bonds. They hold 20% of the French bond market alone. Those, or that money is flowing back to Japan, okay, and more will flow out, okay. Also got the potential for risk off. That's going to be bullish of the yen, and it's going to help the yen on all currencies. Yeah, I don't think risk on is going to hurt the yen either. So just an additional fundamental in the background. I think, yeah, we've seen some nice downside, but I just see plenty more to come in this pair, hopefully. We shall see. Right, let's move to the last chart, which is going to be AUD JPY. On the last pair we're going to look at, Dave, which is AUD JPY. And in terms of this pair, it really is the barometer of risk on v risk off amongst the major currencies. I personally don't think we're going to be going back to that sort of real risk on we had a while ago. I don't see the Aussie, getting too much firmer. Of course it could. I just feel that its fundamentals, in terms of their bullishness, have peaked. RBA to raise rates now out, and commodity prices are strong. I think they'll fall. Just think, we've had a nice breakdown. Now we've gravitated back to the 20. I think it's
just corrective action. I'll just draw my levels at the moment. But first of all, COT net traders, speculators 3.8 to 1 in terms of longs v shorts, commercials 2.9 to 1, shorts v longs, divergence 6.7. You note up here I put the divergence of 15 when we first got alerted to the trade. Obviously it's well down. It doesn't indicate a trend change. You're not going to have it extreme once you've got a trend in motion, okay? My own view is the commercials will sell in to the rally. Now, in terms of a target on this, I haven't done the weekly chart today, but I've got weekly support at 76. So if we do get there, it's still quite a long way on the downside. Now, how would you play this trade? Well, yeah, just again with the 20-day moving average, you can see it's always effective when it breaks or gives you a good entry point, because get through the 20, pokes, can't get back through it, then off she goes. This is the first test. She's actually through it, okay? She could run a little bit higher. The Aussie, for me, is a sell if it runs up, or a weakness. But in terms of it goes up, I would go... That is the level of resistance I think we could target. Sorry, I can't draw my line straight. There we go. So 84.50. Okay, so she came up towards that level. Don't presume it's going to hold. Just sell back through 84 on the 20-day, which will snake up behind. Stick your stop back behind 85. If she ran on, I would look for this level to hold. Okay, then sell weakness back through 84.50. You have to see how it progresses. I don't think there's too much upside. What about selling a downside break? Well, I think, look for the round number, which is 83. Okay, so I would just sell it back through, let's say, 82.80. Where would you put your stop? You probably don't need to be as far back as here. You could probably just be behind the 84 level, 84.35, something like that. Because if she breaks down the 20, then she'd act as resistance and see if she runs to the downside. Personally, well, I just said it, haven't I? I just think this is corrective action. Just if you're coming in, just be careful that you've got some confirmation of weakness. Personally, it's been a decent move so far. I personally think there's far more to come on the downside. So we'll see how these trades all pan out. Right, that is the video for today. Thanks very much for watching me as usual. Take care. Have a good day.